Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A vehicle manufacturer and a data storage company top this week's list of aggressive growth stock picks. And our new aggressive growth stock strategist, Brian Bolan, is here with us to fill us in on all the details of both of these companies. Brian, first of all, welcome.
Thanks for having me.
It's a pleasure having you aboard. We look forward to a lot of interesting information in these weekly segments. ACAT, ACAT, the ticker symbol, is that vehicle manufacturer. I guess they're a vehicle manufacturer, right? They make vehicles.
Absolutely. They make
qualifies them.
Snowmobiles and ATVs, that sort of thing.
Right.
And it's a pretty interesting story. You know, the idea here is that they just reported earnings the day that we had our aggressive growth article up on the Zacks.com website.
That was the 26th of January?
26th of January, and they beat earnings. And it wasn't just a beat, it was really a beat down of earnings.
Wow.
So they really came in over the top. The analysts were expecting 58 cents per share. The company reported 92 cents. So that was a very strong beat. And you know, you would think that in a winter where a lot of regions haven't seen that much snow, snowmobile sales wouldn't be that big. Apparently ATV sales were.
That's what I was going to ask.
You know, so there's kind of that pull and play that they can do. If they're not going to be selling snowmobiles, they're probably going to be selling the ATVs.
Yeah.
But either way you look at it, sales were up, earnings were up, much higher than expectations. So there's a 34-cent beat on the EPS number, and that translated into about a 28% jump in the stock.
Wow, pretty good.
So there's that good part of the story, not to mention that there was a buyback previously in the month of December. A company bought back 6.1 million shares from Suzuki, and that basically took down the shares outstanding about 33%. Now we know from a earnings per share calculation that when you take down the number of shares outstanding, the earnings are going to move down. And that's the other thing that we've been seeing is that earnings estimates have been moving up and moving up steadily for this company.
Okay.
Previously, the 2012 estimate was 80 cents back in February of 2011. It's moved as high as it moved to $1.22 back when I wrote this article, and today we're looking at $1.68. So earnings have really jumped, you know, more than 100%.
And today's January 30th, by the way, if you're following along on the calendar, the day we are recording this conversation.
Right, so the estimates keep on moving higher, and that's exactly what we want to see from a growth stock, an aggressive growth stock.
Okay. You have a stock price chart on this or no?
You know, we have a price chart here, and we use the price to consensus graph here, and it pretty much shows us how the expectations for the earnings for ACAT continue to move up, and that pulls the stock price higher, as you can see through the chart.
Okay. Xyratex Ltd, XRTX, the ticker symbol, is the data storage company. Is that an accurate description of what they do?
Yes, that's pretty much exactly what they do. And, you know, data storage has been a very hot space lately. You know, there's been a few IPOs in the area, and of course there was the flooding in Thailand. I reminded us all that this is where the companies that create these things are really based. So the floods created a couple things. There was obviously a supply constraint that a lot of the big players felt, Western Digital and a few others that are, you know, bigger names in this space. You know, Xyratex is a very small company, but only about a $550 million market cap, so it's not going to get the same press. But what it has done lately has been beat earnings. And again, that's exactly what aggressive growth investors are looking for, stocks that really trounce earnings. The most recent quarter, analysts were looking for 30 cents per share, and the company reported 70. That kind of beat, you know, is really significant. And the quarter before that, there was a similar beat where analysts were looking for 16 cents, and the company reported 32. I'm not really good with math, but I know 16 times 2 is 32, so 100% beat there, and more than 100% beat on the most recent earnings report. But both of those moves only translated into 4% moves on the stock price. So your earnings beats there haven't really turned into something great, but you can see from the chart here that the stock has moved up significantly over time. So it's not an immediate impact, but an over time impact. And that's basically because there's only 2 analysts covering the stock. So that kind of, you know, hurts the company in a way.
Yeah. All right. Do you own either of these two?
I don't own either of these 2 stocks.
Okay. We have other stock pick ideas for you up on our website, Zacks.com, and you hear me say all the time, if you're not there already watching this video, then get there because we change those stock picks for you each trading day. 4 new ones each trading day for your consideration. With Brian Bolan, I'm Terry Ruffalo.